Hi guys, welcome back to the channel, best place for long-term stock investors. Welcome to our new studio. Don't worry, it's not going to be white all the time. I assure you it's going to look a little bit better. But anyway, let's talk about why you're here basically, right? We're going to talk about the budget, our reaction to it, and of course, disclaimer, none of what we say should be taken as financial advice. Do your own research and of course, talk to your financial planner to make investment or financial decisions.
Are you struggling to build your 6 to 7 figure portfolio and don't know where to start? MJ and I, we have the perfect solution for you. We've done this free FIRL Masterclass where we will show you in a concise and step-by-step manner. You can find the registration in the comment section below.
All right, guys, before we begin, we just thought that it would be important to share with you some basics of how the Malaysian budget works. So, John, you want to walk us through?
Yeah, think of the Malaysian budget like any other company, I guess. There must be a source of income or source of revenue, and there's also the expenses, which is the expenditure and also the spending. So let's look first at where it comes from. What are the revenue sources of the federal government? So there's this thing called a tax revenue, which is a direct tax revenue. And there's also the indirect tax. So a lot of people, I think even including myself in the past, we used to think SST or GST was a direct tax. It actually is an indirect tax. The direct tax actually comes from 3 different components, which is SITA, which is corporate tax, your individual tax, individual taxpayers tax, and PITA, which is the petroleum tax, the petroleum income tax, right? The indirect tax consists of SST, your sales or service tax, used to be GST, which I'll talk about later. Then you've got excise duties, import duty, and export duty. So import duty, export duty, as the name suggests, if you're importing anything, there's a certain duty. If you're exporting something, there's a certain duty. Excise duties are like, for your cigarettes and your liquor and all that. Those are excise duties. And there is another component which is a non-tax revenue. These are licenses and permits in which they grant either businesses. This is another source of revenue. And last but not least is investment income. Yeah. So as you can see, I highlighted in yellow, the biggest components of the direct tax and in the indirect tax is actually the corporate income tax as well as SST.
All right.
Okay, this is where...
This is also where GST would be, right? If GST was still wrong.
That's right. So take note on the number in 2021, it's about 27.9 billion, right? So these, if we were to plot it out in terms of the difference between what we call petroleum-related and non-petroleum-related revenue, this is how it would pan out and look like. On average, we get about 230 to 250 million or 260 billion income.
And then the trend is that, people like to say we are dependent on oil. I think it's quite clear that over the past 10, 11 years, 12 years now, we are actually moving away from it.
Correct. We're trying to reduce. If you see this purple area, MJ, this was where Petronas actually gave a special one-off. In the past, if you just look at the petroleum revenue here, which is this light purple color, this is where kind of Petronas topped up here and topped up here, right? But this is where I really wanted to point out, because 2014, if you remember, was the year the government implemented GST.
Yep.
And prior to that, you see this thing that says Cukai Jualan and Cukai Perkhidmatan. It combined will roughly be about 16 billion. But if you look at 2015, where GST was fully implemented, 16 billion against a contrast of 21 billion.
Yeah, it's huge.
It's huge, okay? I'll show you the next year, which was the year before we abolished GST. In 2016, GST alone would be roughly about 38 billion.
So nearly 40 billion.
Yeah.
And 40 billion is already closing up to income tax, personal income tax. Already.
Correct. Exactly. So I don't mind being honest. I'm a proponent of the GST because it's a consumption-based tax. I know there's a lot of popularity towards abolishing it. But I'm of the thought that GST is a more broad-based, there's less loopholes. And if I remember correctly, the former Prime Minister, Najib, actually mentioned that the GST was trying to reap in the shadow economy tax, which is about 300 billion.
Yep.
Yeah. And in the past when SST was being implemented, that 300 billion was actually not properly taxed. So GST was actually helping this.
And it's a fair tax as well for me for GST, because if you spend more,
correct,
then of course you then pay more tax. And who spends more? Actually, rich people.
Exactly.
Right? So in fact, I still remember when it came out. The only thing I kind of disagree was that they just had, I believe it was 6%, right?
Oh yes,
6% across like a lot of all these products. So medical and food now, that was all about 6%.
Yeah, but there were some items that were 0 rated.
Right.
Yeah.
So I think what they needed to do was to create a tier. So like, for example, anything within the luxury segment. So I think, for example, if a big house or big car, so your Porsche is Lamborghini, I think those should have higher GSTs. Right? Because whether a country has Porsches or not, it doesn't really matter. And then imposing, a slightly higher tax on that won't really annoy rich people.
So it's the tier-based system lah. So the base of 6, and then anything more luxurious goods, then there's a higher tier lah.
Yeah, I was in favor of that, because at the end of the day, you want a system where the rich pays more and the middle class pays less and the poor pays the least.
Yeah, yes.
And when you just put 6% across, pretty much the rich will end up paying more.
Correct. Great point. So so that was where revenue, income sources. Now we talk about the spending, and I only have 2021 figures because this is we don't have the 2022 figures. 2021 figures, a big chunk, and I think we've both discussed this before, MJ. The Malaysian civil service comes in as the biggest spending pot lah.
Yeah, of course.
Yeah, and the word they use, when we used to research this probably like 3-4 years ago, there was this word called emoluments.
Yeah, emoluments.
Right. So that stands for all the civil service salaries, operating expenses, and all that. 84 billion in 2021. It's increasing every year. Obviously, when you have a growing size in the civil service, right? What I wanted to draw attention to is actually this thing called the debt service charge. That means whatever loans that the Malaysian government issues that they need to pay interest, the interest is actually rising every year. And what was worrying MJ was that the Auditor General expressing his concern that Malaysia is actually taking on new loans to actually service the old loans.
Yeah, that's true.
Yeah, and I think, but at the same time, you were saying something about a lot of people worry about the US debt.
Yeah,
crisis.
correct.
Yeah, maybe you want to elaborate.
Yeah, I mean, using that to pay off that, I think on an individual level is usually not a good idea, but somehow on the governmental level, because you are big, right? Yeah. So the key thing is, and this irony came from Donald Trump, right? If I owe you $100,000, you own me.
Yeah.
If I owe you $100 million, I own you.
Yeah.
And what that really means is that when there's so much money on the line being lent, for whatever reason, people become more lenient. The more people money lend out, the more people, and that's why corporations can get away with reorganizing their loans.
Yeah.
Right. Yeah. There's always this thing called debt restructuring
or debt forgiveness, actually.
Whatever. But there's no debt restructuring for when you cannot pay your mortgage, right? As an individual.
Yeah.
So I think we run the risk, we run the danger of extrapolating what we experience in real life, where it is not a good idea to take loans to pay off loans. But in government, it works very different, right? Like, for example, even today, the UK government is paying off debt incurred in the 1800s.
Yeah.
So sovereign debt is usually, or what we call countries debt, is usually not a big problem, especially in an era where interest rates are already so low.
Correct. And remember the discussion we had yesterday about countries?
Yeah.
Where we were trying to come up with a list of countries that actually defaulted on the debt. Actually, it may, it's good for news headlines like Greece or Argentina or all that. But out of a lot of these countries, right, the percentage of defaults on sovereign debts is actually very low. I mean, if you take it as
it's usually it's not so bad. And when you look at countries that default their debts, it's always a mixture of, like, usually it's a non-diversified economy, or like corruption is like through the roof. Now, of course, this isn't to say that there's no corruption in Malaysia, but it's not on the level of certain South American or African countries.
Yeah.
And we do have a diversified economy, right? We rely on commodities. At the same time, we rely on manufacturing, and then our internal economy, the SMEs, all that. Malaysia is in a space where the economy is good enough to like sustain itself. It's not going to be a great economy by any stretch of the imagination, but it's still going to function well eternally. And then it also has a very strong export
export
culture.
oriented. Yeah.
So then we earn in US dollars, many of our big companies. So it's not really, ultimately, it's not really a big issue.
Yeah, great. So there you go. Basics of the revenue against the expenditure. We're not going to debate about policies and political mileages that what the government, a lot of analysts, and I tend to agree with some of them. It says it's a very election-driven budget, and which I agree to a certain extent. There's also the discussion about, the COVID fund. They had to dig into the reserve fund. But more importantly, what I feel should be more carefully watched, too bad I didn't bracket it, is actually these grants to statutory bodies. If you see the amount is not small,
that's
about
right.
15. So what do statutory bodies actually mean? Guys like DBKL, they have a huge budget, right? JAKIM and all this. These are where I feel the resources could be channeled better into probably the education ministry, healthcare, development of rural, rather than into statutory bodies, which in a way, you would sometimes question the legitimate function of it. But that's my honest opinion, okay? So, there you go.
I mean, I think, I think we'll leave this to the next segment.
Yeah, we'll leave this to the next segment.
Okay, guys, if you didn't know, we actually would like anyone who's talented, who's really good, to be part of our exclusive research team. The way you can get in is by just sending us emails of your research report in Google Docs or Google Sheets or Google Sheets format. Key thing is that you don't just want to send us your financials of the company, of your analysis. Please write down some of the qualitative things. For example, what do you think of management? What do you think of the valuation? And of course, what's the opportunity? What are you excited about?
What the prospects are
to these companies? Yes. So you can email it right here and looking forward. Okay, John, I think this is the big one.
Oh,
yeah. The prosperity.
This is the elephant in the room.
Cukai Makmur. And so what is happening is that there's going to be a one-off 33% tax on companies earning above 100 million ringgit. That usually is 24%, right? But now it's
prior to this, it was for micro SMEs, it was micro, small, and medium. Chargeable income below 600,000, 17%. Anything above was 24. Non-micro SMEs is 24 flat. That means anything, right? Now what they're saying is that it's still a tier. First 100 million chargeable, 100 million, 24%. But anything above is 33.
Yes.
Yeah.
So, of course, I think this is directed to the players who did well during the 2020,
COVID recovery kind of.
So this would predominantly include the glove guys, right? I would assume Top Glove, Harta Lega, but then also I think some of the tech guys maybe.
That's right. Actually, the Edge did break it down.
There you go.
Roughly about 125 companies in financial year 2020. And interestingly, the GLCs are going to be hit first. And at the time of this is recording on Monday, the market has not reacted positively to this. I think market is red. And we were discussing within our research team as well on Saturday night. It says that just imagine the amount of market capitalization that will be wiped out because of this. Yeah,
that's it is what it is, right? And I think the whole idea of the government is that there's so many of these people, corporations, business owners who made a killing during COVID. And it's a way to like kind of give back to the society, right? Do we happen to know how much and how they're gonna spend that money, or any clues?
No, but I do know it's on average. If I remember correctly, it would shave off roughly on average 11% of any one of these guys that will be taxed.
I remember we did some calculation. We came up to a number of 8 to 9 billion, right?
Yeah.
Additional.
Correct.
8 to 9 billion is about half of SST.
Correct.
Less than half of SST for once off.
Yeah.
So, for me, it's like 8 to 9 billion sounds like a lot, but really, when it comes to the country, I'm not sure what.
It's a drop in the ocean, man.
It really is it's a drop in the ocean.
Yeah,
I think, personally, for me, I think it's more political than economic, right? Because if it's economic, they would reintroduce the GST.
Correct.
But of course, imagine,
the
people
repercussions.
don't have jobs and whatnot, and then you introduce GST, people are going to get angry. And it's a pretty hard moment. I think it's, if I'm not being cynical, I think there are many politicians who have a good heart. They want to, kind of help all these poor people. But then I think there's going to be a chunk less kind ones who are really doing this so that maybe they can win the next election.
Popularity contest. In a way, it's like trying to be Robin Hood. Tax from the rich. And then, ironically, right, you see, my thoughts are this, MJ. You do this to the companies, it's only for 1 year. If you were Maybank, Public Bank, CIMB, right, what will you do? You will kitchen sink next year.
Yeah.
You kitchen sink because you know your profits are going to be hit by tax. You do write-offs, you do depreciation to the max, in order for you to lower your profits. And you just kitchen sink one off.
But I'm not too sure how they're going to do it. Are they going to do it based on like 2020 profits? Or it'll be quite crazy, because if let's say it's 2020 profits, which is where a lot of these companies made their money, right?
Yeah.
Then they will have to backtrack. But then the company would have already started spending for 2021.
Correct.
Obviously.
Correct.
So, but you got something to say?
Yeah. It's actually, the sad part about it is because it's once off, right? It jumbles up a lot of the planning, because a lot of these big companies, right, they don't plan for 1 year, 2 years,
Yeah, of course.
They have a
5, 10 years.
10 years kind of plan. It kind of like messes with the flow. Are you willing to spend next year? I mean, if I were in their shoes, next year would be the best year to cap. If they're doing financial year 2022, right, I would kitchen sink and do my capex next year, man.
Yeah, man.
If they are allowed accelerated depreciation, even better.
Yeah, and I think link to that, this I think is probably much less sensible act compared to this. This is okay, it happens, 8 billion, company's gonna survive.
Yeah.
Country get some the government gets some additional money. Hopefully they spend it wisely, right?
Yeah.
I think this one is a much bigger one, which is the foreign tax exemption, right?
Yes.
Look, it's very simple, right? Now if you earn money in Singapore, in Indonesia and all that, US, you want to bring back money, there will be actually tax.
Yeah.
As a Malaysian resident. I think this doesn't bode well, because we need FDI, right? We need people to come in. We have always relied on FDI. And then now FDI is being taxed essentially, or Malaysians. So what's going to end up happening is that Malaysians are going to find a way, and they will find a way to essentially try to get money in
without being taxed.
Or maybe don't even
they're not going to repatriate money back already, actually.
Yeah, so I don't really understand this
rationale, is it?
But of course, what will be interesting is, to the people who promoted this view, I hope they are tracking the results, because at the end of the day, we can have policy difference, but we should at least agree that we should have a policy that works, right? So they should be tracking, for example, what is the remittances coming in every year that is income-based, not like gift-based, or not like, let's say, you giving your daughter or whatever, like, because of income generated overseas.
Yeah.
And track how does that affect. Because if, let's say, you implement this rule and then next year the thing still increases 5% or 10%, okay, then maybe you can put the rule there, right? But then if it declines, I hope the policymakers at least say, oh, maybe it wasn't such a good idea, let's get rid of it.
Yeah, let's scrap. Actually, this is very similar. For me, this was very similar to the US tax system, because the US tax system, it doesn't even need you to be residing in the US or income generated in the US. As long as you're working anywhere in the world, you have to pay income tax.
Yeah.
Yeah, so it kind of like mimics that already.
Yeah.
Similar, moving towards that direction.
But the difference is that in the US, people don't mind doing that because when they enter the US, then at least they have their money there. They can do a lot of things with their money, right?
Yeah.
The issue with Malaysia is that we don't have that kind of privilege. And think of it this way, right? So if let's say a foreigner or a Malaysian who made money, in
Indonesia or
whatever,
Thailand,
and he brings it back, right? It's not necessarily he just bring it back and then just keep it in his bank. Maybe he take it and he spends more money on a house or that. Okay, so good. So that's your RGT right there. RGBT. There's your
car, excise
taxes.
duty. Yeah.
Then maybe he buys a property, then he pays rent on the property, or maybe he buys food. That's your SST right there. Maybe he starts a business, so that's your corporate tax right there. Then maybe he hires other people, which then creates more personal income tax.
Correct.
So this is what happens when you only measure or you only want to measure policy about what you can see.
Yes.
What you can see is money comes in, maybe, 1 billion foreign remittances a year.
Correct.
You can tax let's say 25%, then you get 250 million. Then you think it's very good, 250 million, right? What I think the policymakers don't see is a potential reduction in that 1 billion, let's say.
Yeah.
And then, because the 1 billion that is not spent in the Malaysian economy, you're losing out on so many other potential tax.
Precisely.
And those are unseen, right? Because it hasn't happened yet, but you know that it could happen.
And in all honesty, it's not easy to measure. We understand. It's not
Of course.
easy to measure. Singapore has already seen this effect. You look at Eduardo Saverin. You look at
exactly.
Forrest Lee and all this, right? Why do they get there? Because it's not just because it's a safe city, but it's because tax rates are favorable for them.
Yeah.
Company corporate structure is favorable to them, and all these are clearer policies. Yeah.
Yep.
So it's like this is penny wise, pound foolish.
Potentially. But again, for me, at the end of the day, is what works, right? So if let's say you implement this tax rate and it doesn't affect your foreign inflows, then go ahead, right? People will keep doing it.
Yeah.
If you are enjoying the video so far, remember to share with some of your friends and family. Remember to like, comment, subscribe. Click on the notification bell so that you know when new videos come out. All right, John. So we have Sita, we have Pita, now we have Gita. Right?
Gita.
Green Investment Tax Allowance. Yes. So obviously, I think what they're trying to do is we talk a lot about what they're going to tax. Now it's what they're not going to tax, right? Which is green technologies, right? So I think this is very positive for some of the solar, hydro, electric people, people related to electric vehicles. But even though, in our view, it's as carbon intensive, but doesn't matter. So what are your thoughts about all these exemptions?
Probably rather than me read through, I think you guys can read it off. But more importantly, I think it's a good thing because most people hold back from spending on all this green technology because it's expenses and it's not likely to pay back. And instead of giving subsidies, I think the other alternative is to give tax exemption, which I think is a good move. Whether solar players or not will be directly, directly benefiting from this, not so much. But this is more about rainwater harvesting, more about qualifying capital for all these green solutions, which I think is very, very good. Because people look at green energy and if they think like what you just mentioned, solar, all this expensive stuff. But these are what I call low-hanging fruits. Rainwater harvesting system is fantastic. We have a lot of rain. We have even floods in Malaysia. And yet we are not, channeling enough money to build the right infrastructure to harvest all this. So, I think the next one I want to move on to is actually this oil and gas late life asset. For me, this was very, very out of the ball. Really out of left field. It was so specific when I was reading this, right, MJ? I was thinking that there's only one company in mind listed that will directly benefit from this.
And who's that?
It's the national flower. Because it's so specific. It's like if you read tax incentive for late life asset projects. Now, for those of you not familiar with this term late life asset, these are actually existing oil and gas fields that have been producing for, let's say, brownfields, right? 15, 20, 25 years, and they want to squeeze the cigar butt out of it, right? And they're getting petroleum income tax capped at 25%, accelerated capital allowance. So that means you can kitchen sink. And the losses of decommissioning activity. This decommissioning activity actually entails that they have to chop off the existing platform and make it back to normal state and all that. This is usually the most expensive, and it's very specific that they can carry forward all these allowances and income, which is is like so specific.
It's like the government telling you what stock to buy.
Yeah. I look at it, it's like, oh my gosh, there's only a few guys. And that's the reason why a lot of these guys like Repsol selling off, guys like Petronas, guys like Shell, they're selling off all these life asset because they want to alleviate themselves from this decommissioning costs. And here you go, the government is coming back and says, okay, if you're doing this for us, you can clean up for us, we'll give you a lot of exemption, Yeah.
I think that to be clear also to everyone, disclaimer, do you own Hibiscus?
No, I don't. Too bad.
Okay,
Yeah.
sure,
I should have
we don't
picked it
own
up
the
at
share.
60 cents, but too
Okay,
bad.
not financial advice. So anyway, sorry, continue.
Yeah, so there's also export duty exemption on petroleum products. I know it sounds is like a very simple phrase. So what it means is that whatever crude that these companies actually who benefit from this, that they actually export or sell, they don't get export duty. So it's like on top of all the capital allowances that they get, they also don't get tax on the crude being exported. So
That's good, man.
yeah, it's like
So small. It's a small lift for the. So it's weird, right? On one hand, they give like tax allowance to like the green stuff, and then the non-green stuff, or in this case, the brown stuff.
Yeah,
they give a tax them. So
precisely,
okay.
precisely. Yeah, this digital ecosystem acceleration. I think in the past, MJ and I keep on saying that we should look at government policies rather than politics.
Yep.
And I think why I wanted to highlight this is that are they matching grants or matching income tax exemption similar to our MSC Pioneer status, which is like you get 10 years, 5 plus 5, 5 years you don't get tax, and then a 5 years extension. This is somewhat similar in my opinion. They are trying to encourage the adoption of a digital ecosystem for businesses, especially for SMEs, micro SMEs. I think this is good, but they have to apply within that period, October 2021 till December 2025. So it's they get 100% off investment tax allowances on their capital expenditure. So
So that's really good.
Yeah, this is kudos to the government. I think it incentivizes a lot of these guys, the technology providers or the digital infrastructure providers. So like digital infrastructure providers like Cloud Guys and all this, I think they benefit a lot from.
Yeah, what I like about I think not just this budget, I think in general, regardless of what what party is involved, they always want to be a lot more friendly to like newer upcoming economies.
That's right.
Right. So I find that to be good, right? Like whether you're talking about your MSC status, whether it's Pioneer status.
Yes.
And of course now we have this digital ecosystem acceleration scheme.
Yes.
So yeah, hope some of the players in South Malaysia will take full advantage of this.
Exactly.
I expect them to.
Exactly. And it's actually very tied to this as well. Even the Semiconductor Manufacturers Association of Malaysia came out to say that they're very happy with this matching grant. So if you read carefully what I've just highlighted, 100 million for smart automation matching grant. So it's like very specific to a niche, which is the ATE players, right? Obviously, there's a lot of details.
But what's interesting, you say ATE, right?
Yeah.
But okay, so I'm not saying this is a bad move by the government, but I'm just saying it may not move the needle that much. Not because of the amount, but because if you think about it, ATE guys are usually high margin.
Correct.
So chances are, right,
they
already have the money.
Yeah.
So
it's already packed into the cost already.
It would be a lot better if they had some of these grants maybe for the OSAT people or the EMS people.
Correct.
They actually need they actually need.
Ironically, that one will have to do a lot with foreign labor policies, which is contradictory because EMS, the OSAT guys, they require a lot of more labor intensive kind of work. So
it's I'm not saying it's a bad move, of course. If you are ATE player or you are ATE shareholder and your company takes one of these grants, that's okay. But that said, I mean, it's only 100 million, right? So a company like Vitrox really makes
I think 160 million net NP, you know.
Yeah,
so
that's just Vitrox, right? So
Yeah.
imagine all the others. It's not. I mean, it's nice to have, you know.
Yeah.
But do I think that it's gonna do better? That pushes that much further? Probably not.
Yeah.
Yeah. Last one I'll talk about is stamp
Stamp
duty.
duty.
I'm
I'm equally perplexed now. Why did they do this actually?
I don't know lah. Really, the participation is so low in Bursa Malaysia relative to regional peers. I have no idea what this is for.
Ironically, if you do the math, right, MJ, it doesn't impact as much as to the retail traders, but actually the institutional traders, because it's a 0.505 percentage margin, right? Only when your contract size is very, very big.
Yeah.
So.
My conspiracy theory is that they were debating about the capital gains tax.
Ah.
And nobody wants to. Everyone says no. So then the government who wants the capital gains says, okay, fine, we will find a compromise.
Yeah.
We will increase stamp duty. And so that's how they came about this decision.
Yeah.
But yeah, I hope you guys enjoyed this video. Obviously, there's a lot we left out. You know, budget is
it's a big
it's
thing.
very, very big.
Yeah.
Right. Of course, I'm sure some of you all will agree or disagree with what we said. If you
let us know in the comments, guys.
Let us know in the comments, man. And of course, follow us on Facebook, Instagram. We have a Telegram chat as well. Remember to catch our free training, and see you guys in the next quick dive.